Folks, you better get ready. In today's video, we are going to break down the top 5 stocks to buy non-stop over the next 90 days. Each of the stocks in this video have number 1, extreme momentum in their business, number 2, extreme protection from their competition, a big moat around their business, number 3, a track record of momentum on the stock chart, number 4, substantially more upside to be realized, and finally number 5, a clear price target. In today's video, I'm going to break down for you each of these stocks, make my case for them, and then let you be the judge. And folks, a clear warning, because many of these stocks are in the middle of a big momentum cycle, you do need to use caution and a clear strategy. You can't just chase them up. You have to understand what you're buying, why, and how to make tons of moolah on them. And we're going to try our best to break that down for you today. And as always, if you're the one taking the ultimate risk, you got to be the one doing the ultimate frisk. Always do your own due diligence on all ideas presented. Again, you got to be the ultimate judge. And quick warning, time is running out on our Palantir 75 coupon code on ZipTrader options. If you'd like to get our alerts, our step-by-step video lessons, and our private Discord chat, I'll put the link to that down below. Also, secondly, if you're wondering what broker to trade stocks and options on, well, we highly recommend Moomoo, and they have an excellent deal where you'll get tons of free stocks if you just sign up using our link down below. Okay, we need to start with number 5, HIMS. So Hims & Hers is a telehealth company that is waging major war on Big Pharma, and it's absolutely skyrocketing right now. Hims has undoubtedly been one of our most powerful plays the last few months, and we have to credit the bull market for acknowledging the setup so fast. But the bigger picture truth is that this was always a clear-cut stock with a clear-cut business and continues to be so. If you bought the stock when we first called it out publicly on YouTube back in the fall, you're now at about a 3x. If you bought calls when we alerted them on November 20th, well, those calls went from $6.11 to now $41.50 at highs. That's a run of about 579% alert price to highs. Now, our bullishness on the stock was based on the exponential growth in customers and recurring revenue they were experiencing and continue to experience. And when you put the work in obvious solid buy companies and you buy them at the right price during a momentum cycle, well, guess what's going to happen? Oof, you're going to make oodles and poodles of money. Folks, I like this company a lot. They are sticking the finger to Big Pharma and helping bring down prices of everything from drugs to doctor visits, and helping overall convenience and overall customer satisfaction is top notch. And we know this not just because of the reviews and testimonials, but also because if you look at it, well, those customers are continuing to use Hims & Hers services month after month after month. You look at this chart here, subscriber expansion is consistently up quarter after quarter by a lot. And then you look at revenue, well, revenue per subscriber is up even more. Back in Q2 of 2022, they reported $114 in quarterly total revenue per customer, and by Q1 of 2024, that's up to $278. And if you look at Q3 of 2024, the most recent report, they reported subscribers at 2 million, and the trend of monthly revenue has continued to increase. Now, that being said, we are in the middle of entering into a new paradigm for Hims. If you missed our coverage of the last couple of weeks, well, Hims launched a Super Bowl ad, and it's been super effective so far. Hims & Hers told Fierce Healthcare that traffic to its site spiked 650% in the hours after the ad. Now, folks, the sheer impact that the Super Bowl advertisement and other awareness campaigns are having is waking lots and lots of people up. Not only is Hims going to see even more extreme member growth and adoption and money, but more importantly, tons of investors are now waking up to this stock. I was expecting Hims to run up into the Super Bowl, and then you'd see some people take profits before its next momentum cycle to a higher high. But Hims just skipped that whole process, and we love to see that. And again, that's why at the end of the day, you could speculate all you want, but at the end of the day, the business itself is what motivates a stock higher. But now the next big event for this stock is coming next week on the 24th. And that is earnings. And if you look at the numbers from the last earnings, let's just say, folks, it was ridiculous, off the charts. I expect the analysts will be just as shocked this time around, if not even more shocked. But if you just look at these numbers, I mean, if you're wondering why Hims is justifying such a rally, well, try to find other companies with growth that are in the triple digits of percentages. Now, that being said, Hims is up a lot, and you've made tons of money if you bought when we originally recommended it, if you bought it in the weeks and months after we originally recommended it. And I believe you're going to make tons of money if you buy it now, but you have to do it strategically. You can't just chase this up, because again, I do believe we are going to get a take profit cycle at some point before the next higher high. As I've stated many times, I believe this is easily a $70 to $80 stock in this cycle based on the numbers that HIMSS has reported and the membership growth numbers that I expect to see. But we've now realized a lot of that run, so the risk versus reward is flipping a bit. I would lock in some profits if you're in this, and then once we get the earnings next week, I fully expect to upgrade our price targets to higher than that $70 to $80 region, but I'm still going to stress caution until we have that earnings report because, again, the stock has gone up so much. But based on those earnings, we're going to use the real data to assess, hey, is this going to be even more than a $70 to $80 stock? Is this going to be in the $90 to $100 region? It's definitely possible, and expectations are member growth is going to accelerate exponentially after the Super Bowl ad and the other advertisement campaigns that they're doing. We just need to see the data to back that up because, again, we like to do data-based trading, data-based investing decisions. We don't just gamble. We look at a stock's business, the numbers they're doing. We look at historical patterns on the chart, and then we take a risk-managed position. Okay, number 4, Hood for Robinhood. So about 11 months ago on March 17th, 2024, we called out Hood as screaming buy based on trading activity and the overall trend there. And obviously Hood had a pretty crazy year. And then after the Trump election, it went really crazy. And if you look at its performance since Trump got elected, it's up 161%. And our alerted call options that we alerted a short while after that election are now up 503%. And the business is absolutely destroying it. I hate to say it, but the retail trading business is kind of like a pump and dump situation. It goes up massively during bull markets and then it drops massively during bear markets because nobody wants to trade during a bear market, which of course, by the way, is the best time to trade because you can snap up the best deals. But nonetheless, the business is absolutely destroying it right now. Revenue is up 115%, net income up 2,953%, diluted EPS up 2,425%, net profit margin up 1,318%. Operating income up 1,129%. Ridiculous. But bigger picture, look at these volumes here. Equity notional volumes up 154% year over year. Options contracts traded up 61% year over year. Crypto notional volumes up 455% year over year. This is insane, and this company is earning its price appreciation. Now, obviously, we have passed a few chapters now of huge price appreciation. So the question is, how is there money left to be made? Well, this is what I see with Hood. Overall, bigger picture, I expect to see Robinhood go far past its 2021 heights. Why? Well, because assets on the balance sheet, trading volume, members, monetization of members, profits overall, everything is way better than it was at 2021 heights. Robinhood simply is the middleman for a lot of people that are going and buying stocks on the stock market. The brand recognition is insane, and during this overall retail trading pump cycle, Robinhood is going to be one of the biggest benefactors. And we know that because that's already been the case during the beginning stages of this big cycle. Now, folks, I do have to caution you, though, this is a stock you ride upward, you take profits, and then you let it sell off during the next bear cycle. This is not a stock that you want to hold at all during the next bear market because guess what? Nobody uses Robinhood anymore and trading volume goes down dramatically. This is a get in and get out of type of play. Again, we've already called out a major winning play on this, which went up 503%. But I believe that we're going to have way more plays in the future. But at the end of the day, just remember risk management because there is a ticking time bomb with this stock. Just assume you're playing hot potatoes, right? Eventually, if you hold the potato long enough, you're going to get burnt. Number 3, Palantir, PLTR. Palantir is an absolute beast. Commercial contracts skyrocketing, government contracts exploding, AI adoption. Well, Palantir is the number 1 government AI player, and many corporations and other types of institutions around the world see them as the number 1 player as well. Defense, security, intelligence, Palantir is the backbone. Massive corporate expansion, Palantir Foundry is spreading fast. Palantir is the top AI dog in the market right now, and it doesn't even come close. Now, sometimes, folks, I gotta say, people will call my titles on my videos clickbait, and they've been doing that for years. However, I don't think they're clickbait. If you bought Palantir when we begged people to publicly buy it in a free YouTube video on September 6, 2022 at $7.28, well, $7.28 to $120 that it reached Friday, well, that's a 1,548% return. If you bought our Palantir calls and we alerted on October 12th, just back in this past October, those went from $5.64 to now $74.48. That's now about a 1,219% return. Now, I'm not saying that we'll ever bat 1,000. Nobody bats 1,000. And quite frankly, Palantir was a stock that we were wrong on for years, before eventually we were right, because again, we did the work and we were patient. And it's the same thing with many other stocks today. I mean, I can name a handful of stocks that we see the business momentum in, but the stock market in this cycle hasn't recognized them as much as we would have wanted to. But nonetheless, hey, if you did the work on this play with us, well, you made a ton of money. By the way, I do want to remind you of coupon code Palantir75, which will get you 75% off our options membership. If you want to get all of our future alerts like this Palantir alert, well, I'll put the link to that down below. But anyways, folks, the bigger picture here with Palantir is, look, Palantir is not a $120 stock. Palantir is not a stock that's going to stop at a $271 billion valuation. This is a stock that will eventually hit $1 trillion plus in valuation. It's just a question of how long it takes to get there. And at the end of the day, yes, we know it goes up massively and then it breathes. And once it breathes, you're going to hear all these people that love Palantir right now say, oh, I knew it was a scam the whole time. And then they're going to sell out. You're going to have all these short sellers put out a bunch of negative articles, and Palantir is going to go down to like 100 or 90 or 80. And then guess what's going to happen? Boom, you get another cycle up and we're at $200. We're at $250. We're at $300. And that's what's going to happen over and over and over again. So be prepared when this bull cycle in Palantir ends. Be prepared to snap up some shares. I've been saying the same thing for years on this stock and will continue to do so because this stock has further confirmed my conviction, not from the stock price standpoint, but specifically from the business standpoint. Stocks can do whatever they want, but at the end of the day, the business is what the stock is supposed to track. And over the long term, the business and the stock price do track each other. In the short term, it's the emotions of the masses, and you can't trust the emotions of the masses. Okay, number 2, SMCI. So SMCI specializes in high-performance AI-optimized servers, and that's quite frankly a gold mine. Every AI data center needs cutting-edge servers to power large language models, cloud computing, and machine learning applications. And the bottom line here is that AI software is nothing without hardware, and SMCI is one of the biggest beneficiaries of the AI explosion on the hardware side. So back on the 6th, a couple weeks ago, we talked about how you need to buy SMCI early before everyone else realizes what a steal this company is, and it was at $33.84 at that time, and the stock has now hit a new recovery high at $48.96 as of the after hours on Friday. That's a pretty nice turnaround in a couple of weeks. But we're just getting started here and we're still very, very early. Now, just for the stock to catch up to its peers, you're looking at more than a double of upside, getting it well over $100 a share. And I think you're actually going to head towards all-time highs, because if you just look at the comps of the other companies in the space, if you look at this company's own momentum pre-short seller distortion campaign, and you look at the recovery cycle it's on right now, well, all that justifies substantially more upside. Remember, this stock, the core reason why this stock was beat down so much is because of a short seller that went shorted and then put a ton of effort into making sure everyone and their mother knew about how bad this company is and the allegations against it. Short sellers know that markets are guilty until proven innocent. If somebody goes and says a lot of negative stuff about a company and people believe it, well, guess what? The stock goes down. And it takes a long time for the stock to go back up after that, because people in the back of their heads are questioning, hey, maybe those allegations are true, even though these allegations have been debunked over and over and over again. Remember, being a very well-known short seller is one of the easiest jobs in the world. All you got to do is short something and then make up a bunch of dumb reasons for why you're short it, and the stock goes down, and before anybody ever realizes that you were wrong, well, you made tons of money and you already covered your position. And if they sue you and say you're wrong, you just say, well, I was alleging that. I said, I think, my anonymous sources, they're the ones that told me this. Don't sue little old me. I only made a few billion on this position. I'm just from the poorhouse. Folks, SMCI is a company that is core to Silicon Valley. SMCI builds the infrastructure, AI, and pretty much every big tech company in Silicon Valley and a lot around the United States actually run on. AI software is nothing without hardware, and that is where SMCI comes in. And SMCI, in my view, is going straight upward. This isn't a stock that you're going to see go up 50% in a day, but it is a stock that I believe you're going to see quarter over quarter continued steady uptrending. That's why we keep talking about this stock. This is why I've alerted calls for ZipTrader options members, and this is why the stock is already starting to see some of that recovery that we've been talking about. Short interest on the stock is at around 20%, and that's a lot of folks that are going to be squeezed out as this goes higher. Remember, short sellers borrow shares and then dump them, and eventually they have to buy those shares back to return them. And so when you see short interest at these levels, that means all of these people, all of these short sellers are now going to have to buy back shares at some point in the future. And as the stock goes up, well, they're incentivized more and more to buy back shares, which causes more forward momentum in the price. Okay, number 1, SoFi. So SoFi has been an underperformer and it's screaming buy. I don't look at a stock that's underperforming and think, oh, because it's not moving, it must not be a good company. No, I look at the company itself, and if the company is moving, then I continue to affirm my thesis and conviction. And I think, hey, if the price isn't moving or even if it's going down, well, that just makes it a better buy. Just for context here, for years and years, we talked about Palantir and how great the business was and all the momentum, but the stock price, guess what? It either stayed flat or it dropped. But guess what? Over the last year, turns out, well, became pretty obvious that we were right, and the folks that believed in the stock alongside us made oodles and even poodles of money. With SoFi, I believe that's going to be the same story that plays out. SoFi has a perfect revenue surprise record delivered over the last 16 quarters, which is an indication of the management's ability to not just commit and outperform, but also a masterclass on how to run a business. The biggest two things to watch with SoFi, well, membership growth and product sales. This is the lifeblood of SoFi's expansion playbook. I always talk members, and the reason is because if you see a company with great membership growth and then the ability to monetize those members, well, it becomes obvious where the company is heading. SoFi isn't just another lender, they are the financial one-stop shop that's creating a big ecosystem, and the more services a customer uses, the more sticky those customers are. And SoFi isn't slowing down anytime soon. The company was just selected by the U.S. Department of Treasury for Direct Express, a prepaid debit program that 3.4 million people rely on to access federal benefits. In 2025, integration is beginning. 2026, SoFi is going to be starting to print money off this deal. And then you look at SoFi Plus. I mean, SoFi just leveled up its premium SoFi Plus membership, adding over $1,000 in annual value for just $10 a month. And if you do the math on this, this is going to drive massive recurring revenue for the brand, and SoFi isn't just collecting transaction fees anymore, which was very lucrative. They're also building a subscription service that's going to print money over the long run. We've seen that work with Robinhood. I think it's going to work with SoFi very, very greatly, and I believe SoFi is screaming buy right now. So anyways, folks, if you're looking at SoFi and you're looking at the trend here, well, I would be shocked if SoFi doesn't hit $30 by mid to late summer. Could happen earlier, but I would be shocked if it doesn't happen by mid to late summer. I'm expecting a nice run up into that Q3 earnings report, and oof, I think it's going to be very impressive. Anyways, folks, that caps off today's video. Let us know your favorite plays down below. Make sure to take advantage of our Palantir 75 coupon code on options membership, and we'll see you in the next video.